So do you feel like your credit score is stuck?
I'm stuck.
I mean, am I like the fourth or fifth video that you've watched about how to get your credit score up?
Yep.
If so, I'm not offended. I completely understand. Sometimes your credit score feels like it's just stuck and it's just not going to move no matter what you pay off, no matter how hard you try. Well, today, I'm so glad you clicked on this video because I want to talk to you about some ways that I have been able to help my home buyers get their credit scores up and apply for their first FHA loan for their first home. Thank y'all so much for joining me. I am Joy Bailey. I'm the mortgage boss. So if you are new here, please go ahead and subscribe if you find this content to be valuable. Also, hit the like button because it does help me with my engagement. And I would like to try to hit 1,000 subscribers in the next 90 days. So I'm talking to you today exclusively about getting your credit score up for an FHA loan. FHA is actually one of my favorite loans to do for people. FHA is an amazing loan, especially for first-time home buyers, because it's so forgiving for credit mistakes. FHA is a great way to get you into your home a little bit faster than it would be to wait until your credit score is super, super high for you to be able to get a conventional loan. So let's talk a little bit about some of the tips and tricks that I'm going to be able to help you get into your home a lot faster. An FHA loan is a loan that's insured by the Federal Housing Administration, which is the federal government. Generally, it only requires you to have a 3.5% down, and your credit score can be as low as a 500 credit score if you're someone that has 10% to put down.
Really?
If you don't have 10%, don't worry. The credit score requirement is only 580 for most lenders.
I mean, that was tense.
FHA is great because it has flexible down payment options and it's very flexible on your debt to income ratio. The debt to income ratio is actually one of the highest allowed when it comes to looking at FHA versus a conventional loan. But before you can qualify for an FHA loan, you got to meet at least the minimum credit score requirements. Thing number one, take a look at your credit report. You have a right to take a look at your credit report from all three credit bureaus, Equifax, TransUnion, and Experian. At least once a year, I would recommend pulling this. I suggest at the very beginning of every calendar year. This can be done by going to annualcreditreport.com. If you do not obtain your credit report through annualcreditreport.com, you may be subject to a fee from the individual credit bureaus. When you're reviewing your credit report, you're going to be looking for a few key things. One, is your name spelled correctly?
Let me see.
Is your address reported correctly?
Not sure.
What type of inaccuracies do you see? Are there accounts that could have or should have been aged off by now? Are there collections that you've paid, but it isn't updated yet?
Oh, hell no.
These are all things to look at because you can now take action and pick up the phone and or submit a dispute for those items online on the respective credit bureaus. If you are able to get some of those items removed or corrected, that could hugely impact your credit score in a positive way. Next up, and one of the hardest, pay your bills and pay them on time. Your payment history accounts for 35% of your credit score. Late payments significantly impact your credit score. And so because the age of, your credit history is 7 years, if it's something that's recent, even though, you may be paying things on time, it's still going to impact your credit score for years and years and years to come. We are going to be looking back at about a 12-month to 24-month history of on-time payments. So if you haven't had bills paid on time and they've been 30, 31 days late, it is going to show up on your credit report. If you're only a week, 2 weeks behind in the payment, don't worry about it. It isn't on your credit report. However, you do want to make sure that you are paying everything the day that it's due because believe it or not, your credit report does indicate which week of the month you did make that payment, even though it might not be 30 days delinquent. If you do have those 30-day delinquencies, don't worry. Pick up the phone, call your creditor, and see if they're willing to delete that information for you by removing the entire trade line. I did it for myself when I had a repossession on my credit, and it actually worked, believe it or not. So make sure you're paying everything on time as often as you can. Next up, you want to tackle your credit utilization. This is going to impact your credit score 30%. Generally speaking, you only want to use 30% of whatever the credit limit is for your credit line. If you have a $10,000 credit limit, pay it down to at least $3,000 if you can't pay it off completely. It's okay to have a balance, but be mindful, the more of that credit line that you're using, the worse it's going to impact your credit score, and the more it's going to impact your debt to income ratio because your monthly payment is going to be higher on that trade line. Here's a quick hack to decrease that without paying it down.
I'm listening.
If you have a good history of making payments with that particular company, give them a call and ask for them to increase your credit line. If you're able to go from, say, owing $5,000 on a $10,000 limit, and now all of a sudden you have a $15,000 limit, that $5,000 doesn't need to be paid down because now you're at that 30% limit that I talked about before that is going to help boost your credit score. If you have very limited credit or no credit at all, or if you've applied for credit cards and you've been denied, I would strongly suggest going online and doing a search for a secured credit card. Usually, you'll be able to get a secured credit card with only putting $250 or $300 up of your own money, and they'll extend a credit line to you for that same amount. This way, they believe, hey, we already have the money if this person doesn't make the payments on time and we need to close the account. So basically, the way that works is you take your $250 or your $300, because I'm going to tell you, it usually starts at very, very, very small increments just to get the repayment pattern established so they start to trust you. You get to $250 or $300 limit and you make your minimum payments. Let's say you went out and you charged up something that was $100. You're going to pay that back $25, $25, $25. They'll see after about 6 months or so that you are somebody that you're handling your credit appropriately. This is good. They're starting to trust you. They may refund you the money back and extend that credit limit to maybe $1,000. So it may take you some time, but that is a great way to start establishing new trade lines for your home loan. One big mistake that I've seen people make over and over and over and over again was closing accounts. Even if you don't use a card but once a year, that's okay. Leave that line item open because it establishes a length of credit history. If you let's say you have 2 credit cards that's been open for 10 years and you close one of them. Well, now your credit history has been cut in half. You want to make sure that your credit history is as long as possible because they want to see a pattern of positive repayment history for a long period of time. I believe that the average credit history in America is something like 11 years. So be very, very careful about closing old accounts if you don't have to. Be careful about credit inquiries. When I look at credit reports, I can see that somebody has applied for 15 credit cards or 5 credit cards, 3 car payments, and 5 home loans. I can see the account history for the last 24 months.
I see it all.
You want to be very careful because when I have to tell people no because of the automated underwriting system's findings, it will have a line item on there that says that the person has had too many credit inquiries. So you want to minimize your credit inquiries as much as you possibly can. My suggestion to determining whether or not you can obtain a loan with a company would be to go to myfico.com for whatever the type of credit is that you want to apply for and see if whatever that FICO score is that's showing there will meet the minimum requirements for what you need for that credit card or that car loan that you may be looking for. I am in no way, shape, or form trying to tell you to go and get a car loan. Please don't do that because that would be completely decimating this whole video. Don't buy a car, especially if you're in the process of getting a house. And last but not least, just monitor your progress. Be diligent. Make the payments on time every time. Don't let anything get in the way. Stay laser focused. I don't care if Beyonce is coming. Do not swipe that card and run it up your credit utilization after you worked so hard to get it down. You want to be at least a 580 credit score, but I'm going to tell you the honest to God truth. You really probably need to be somewhere over 620 to be able to feel really comfortable with your loan application being submitted for an FHA loan. That is a conversation for another day as to all of the factors of why, because this video is limited specifically to increasing your credit score. So you want to get your credit score up as high as possible. I really recommend anything over 620 to 640. That is going to be a good space for you when you're applying for that FHA loan, because it's looking back at all of the things that's happened over the last 7 years, but more specifically, what has gone on in the last 12 to 24 months. If you have late payments, if you've overextended yourself, even though you have the credit score, those factors are going to depress the likelihood that you're going to be able to get approved when we run everything through the automated underwriting system. Guys, I hope this information has been helpful to you, because these are steps that I have literally taken myself when I was going through the home buying process. Be diligent, stay consistent, keep hope alive. You can and you will be a homeowner. If you guys have any questions or want me to look at your scenario, let me know. All of my contact information is below. I look forward to speaking with you soon. Have a great day.